we are covering unfair trade practices for the property and casualty exam. These are the actions and behaviors that are illegal for agents and insurers because they harm consumers and restrict fair trade in the marketplace. The exam will test your ability to identify these practices in specific scenarios. First up is misrepresentation, which is making any false or misleading statement about a policy's terms, benefits, or dividends to persuade a client. For example, telling a client their homeowner's policy automatically includes flood coverage when it requires a separate policy is misrepresentation. The exam distinguishes this from mere puffery. Saying your company has the best service is puffery, an opinion a reasonable person wouldn't take as a literal fact. Stating a policy has a specific feature it lacks is misrepresentation. Closely related is false advertising, which is simply misrepresentation in any public medium like a newspaper, radio ad, or website. Defamation is making false or maliciously critical statements, oral or written, about the financial condition of another insurer or agent with the intent to cause injury. An exam question might describe an agent telling a client that a competitor is going bankrupt to steal the business. That's classic defamation. Next, we have coercion, intimidation, and boycott. These three are often grouped together. Coercion is using force or threats to compel someone to buy insurance from a particular source. A common exam scenario involves a mortgage lender requiring a borrower to purchase homeowners insurance from a specific insurer as a condition of the loan. Boycott is an agreement to commit an act of coercion or intimidation to restrain or monopolize the business of insurance. For instance, if a group of agencies agrees not to do business with a certain insurer to drive them out of the market, that is a boycott. Unfair discrimination is charging different rates or providing different benefits to individuals of the same class and hazard, based on factors like race or national origin. Insurance is based on discrimination, but it must be fair discrimination based on risk. Charging a higher auto premium for a driver with multiple accidents is fair. Charging more because of their religion is unfair discrimination. Rebating is offering any valuable consideration, like a kickback of the premium, that is not specified in the policy as an incentive to purchase. For example, an agent offering to pay for the client's first month's premium is illegal rebating. This is different from giving a small, branded item like a pen, which is generally acceptable. An illegal inducement is a broader category that includes offering anything of value not specified in the policy, such as promising employment or shares of stock to encourage a purchase. Finally, there's twisting. This is making an incomplete or fraudulent comparison of two policies to induce a person to lapse, forfeit, or surrender one policy and replace it with another. The key here is the use of misrepresentation to make the switch happen, which ultimately harms the client. A great way to remember these is with the mnemonic, "My fat dog can't ignore unusual rabbits that bring insects." This stands for misrepresentation, false advertising, defamation, coercion, intimidation, unfair discrimination, rebating, twisting, boycott, and illegal inducements. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.